And we have a question actually on, so basically the models are actually coming from our bot. So this would be the chart that you see, but then we can also translate those levels right here into a TradingView input that you can then put in the chart. And if you want to learn about the swing model, if you create a free account, we actually have an academy course right here just for swing trading. So if you click here, these are all the videos that will show you basically how to use the model. But in essence, what we are trying to do is we are trying to give you a 5 days or 20 days volatility band with also a directional bias. So the idea is using options data and options model to actually allow you to understand, okay, based on the option data, are we in a bullish or bearish bias? So in order to get that, you can see if you have a red upper band right here, you can clearly see we are in a bearish bias. If you had like a lower band, for example, in the case of Google, in this case, we have our bullish bias right here. So in this case, we see our lower band, we see our risk trigger, and the risk trigger is really a 5 days or 20-day upper band or lower volatility band. But the reason why we don't use it, for example, in the calculation of the success of the model is because the model also tries to forecast the direction. So if we are able to forecast the direction, then it is most likely common that this risk trigger might be broken, like in the case, for example, of Google, what happened a couple of days ago. So the goal of this model is really to give you those areas where there could be an increased volatility. So the risk trigger can become a volatility area where there could be like an inflection point, and our lower band is really planning to tell you, okay, there's a high chance that the price will stay above this level over the next 5 days, and you see the success rate right here.
And we will cover this also in the live trading session. So we will start on Monday with our swing trading levels. We will speak 100% about this. And we cover the stocks, we cover the ETFs, we cover everything to get prepared. This will be 100% something what we're covering also.
Yeah, absolutely. And again, you can ask, those levels anytime for any stocks that you cover, and you can do the same exercise. But the goal of this was really to show you, okay, how can this work? Obviously, earnings, some people consider them like a coin flip. It could go either direction. So that this week was actually a very good example to show, okay, let's see what happens if we have good earnings or bad earnings, and let's see how the models could have worked. So I think it was a very good exercise. So that's a good question, Suraj. So the risk trigger, consider it as a target for sure, but also could be an inflection point, because as we said, the goal of these levels is really to not only give you the volatility of that time frame, but also give you the direction. So if we are good enough at being able to predict the direction, then it could be that, especially if we go back to, let's take Google as an example, in this case, we see that obviously the earnings went well and the price kind of like bridged the risk trigger level of 182. So again, that could have been a good target area, as well as a potential inflection point. So obviously we see the price kind of like rejecting this area right here and then going back down, even though the earnings were very positive at the beginning of the week.
But Surai is the risk trigger profit target when long, and Anna was also giving some comment. It's hard to predict the target. It's easier to say it won't go in any lower or higher. Yes, I would say it's really depend based on your A plus setup. And when we're speaking about the risk trigger levels, lower bands and upper bands, so what we're doing with MenthorQ is we want to help you. We're giving you the data to make it as easy as possible for you to read the market and that you can put this in your A plus setup. If your A plus setup is targeting the risk trigger because it's matched also your your A plus setup, what you see on your screen or on your chart, yeah, then this could be a target. Why not? And the same what Anna is saying, it could be also possible, Anna. It's 100% true what you say. So every trader is individual. So we need in the market winners and we need in the market losers. So that's the game. But I say to you, let's trade the A plus setup, where you be 100% or 90%, 80% most of the time successful with. And then look into the data from MenthorQ, what we provide you, and see if this will be fit your A plus setup. And if you're looking for a target, if you be now long and you're looking for a target, yes, the risk trigger could be a target. It could be also for taking partials. So if you want, in this example, we have now Google. If you want target 184, then you have the risk trigger 10.5, 10.29, 10.31, and 10.30. This could be always targets for partial profits. So only as an idea. So it's really individual. So there's no right and there's no wrong.